Good morning, everybody. Welcome back to the Schwab YouTube coaching channel we call Trader Talks for Trader Talk in today's market. I'm your host, Kevin Horner, joining you from a beautiful and sunny Denver, Colorado. Thanks for being here this morning, everybody. Of course, on a Thursday, it is a solo show for me. I am joined in the chat today by my friend, fellow Schwab coach, Miss Barb Armstrong. Please say hey to Barb. Be kind to her. She'll be managing comments and questions for you all today that I'm unable to get to. But, of course, especially in a solo session with me here, I'll be happy to keep an eye on the comments that are coming through in chat. Bring those to our discussion today. So please do feel comfortable posting in there for the duration of our show today, and I'll try to bring those to our discussion. If you're new here, hey, we are providing live content for you here every single day on the Schwab YouTube coaching channel. We'd love your subscription there. Make sure you are subscribed and keeping an eye on what we're offering up for you. I'll go through the calendar with y'all in a moment here. Today, we're, of course, going to look through the broad markets, going to drill into some of the areas that we traditionally don't get to when I have a co-host with me, and we're going to look at a bunch of stocks in the news today on upgrades or downgrades, and take a look around and see what's moving in the market this morning. Now, follow Barb and me on X, Barb Armstrong CS, Kevin Horner CS. The best way to engage with us when we aren't hosting classes for you here on the channel is on X. Now, with that, let's get to our disclosures and we'll dive into things. Please remember that our conversation here is exclusively for your information and your education. We do not make recommendations nor endorsements for any specific approach to trading the market here. We do, however, utilize technical analysis as we review the broad areas of the market. And what I like to do is kind of get some insight into what's happening in the market, use the technical analysis concepts, both as an education of the market, but also education of technical analysis. So please be sure to ask your questions along the way if you'd like. Now, remember, it's important that technical analysis is not considered the only basis of your decision making. So we think it can help out, obviously, in making our decisions. We just discourage you from making those decisions based only off what we see in the way of technicals. All right, now, as we go forward, I'll highlight the agenda. It's a top-down approach here in this class. That means we start with the indices. We move into sectors and industry groups thereafter, followed by individual equities to see how things are moving around. And, of course, looking specifically for stocks that are narrative-driven, headline opportunities on a given day can be really helpful from a momentum basis, and we'll try to highlight a few of those moving around today. Now, before we get to the chart, I do want to remind you about the upcoming workshops. We're going to be here locally in Denver hosting the one of the upcoming events at the Gaylord Rockies Resort. Beautiful spot. We were there last year as well. It's a wonderful opportunity not just to attend one of these in-person events, but to get to check out a pretty great location, the Gaylord. And we're going to be in Dallas for the advanced options middle of the month of April, and then in Boston for a standard technical analysis and options workshop. We would love to see you there, everybody. You can find it here at the link, schwab.com/events, but you can also get to us here via schwab.com/coaching. So the coaching page is right here, schwab.com/coaching. And remember, we offer you the calendar of these events right here from the drop-down live webcasts and virtual workshops. And then, of course, the in-person event link right here. Now, what's great about the calendar, for those of you who are new, just so you're aware, if you wanted to see any of these prior classes, they are going to leave for you in the link. If I click this link from Monday, you'll see the on-demand class right there, ready to go. So check these out if you're interested. And of course, if you're looking to join us for the complimentary in-person events, we would absolutely love to see you there, everyone. So please check us out in person. Check us out here on the channel. We appreciate your patronage. We hope you know across the board. Now let's go ahead and move in to the S&P. Let's see what's happening. There's Dow. We're going to start with the S&P, though. We're going to talk Dow a little bit later. A little bit of an elevation in the VIX I noted this morning. It was up a bit higher right off the jump, but the S&P yesterday managed to make that move off of that extreme candle we got, moved into the 20-day moving average, took a bit of an intraday pause there, everyone. Now, Does that mean that we have to make the 20-day moving average our resistance? Well, if you're a shorter term trader, you may very well be looking at it like that. Look, we are 1, 2, 3, 4, 5 days in a row now below the 20-day. Now, it's interesting to me because if we were to look at the 2 days we got above it, if your definition of a breakout were 1 day or 2 days closing above a moving average like the 20-day here, let's go ahead and just assume the 20. I'm going to go with just the 20 here. Then you probably didn't get the confirmation you were searching for with that move, right? So if you defined confirmation as I want to be above my resisting moving average line for 3 days, you probably looked at this 2-day move and said insufficient to keep me long or to put new money at risk. And you would have been probably right. Now, of course, we've had a news-driven bit of selling in the last week, of course, so let's not overdo our technicals on a headline-driven market, but it is notable that our highs over the last week have been in the 20-day level, but not really capable of holding it. So we're looking to get above the 20 days so that we can start talking about the ascension of the trend once more. It's not yet in place. What's been more in place here has been the sideways action going back to late November here. So I like to look at that on the hourly bars. So I'm going to bring in the hourlies once more, and we're going to just focus on everything that's really happened in there. And you can see yesterday's action took us into those lower highs. And I think that's the big takeaway from this to this point, everybody. Our last low was a matching low to a certain extent, right? I guess intraday, we did make a lower low, but we bounced off of that level pretty effectively. However, the key here now is that we have made bounces that have all been lower highs. So lower high 1, call that out. Lower high 2, got to call that and widen it because that's a bit more like that. And then most recently, if I lift this one, you'll see lower high right there, another one right here, and another one right here. Now, why am I bringing this up? Well, I just want to remind you all, when it comes to technical analysis, we can absolutely move into an hour-long setup like this, hour-long bars, 90 days, what have you, and we can still apply the same standard basic criteria to understanding trend direction. We have lower highs. We have lower lows, even on this hour-long bar chart, so we have to be a bit defensive. And remember, that we may have other beliefs about what's coming next, but it's probably better to allow the market to do what it's going to do, to make a turn, to give us the opportunity to participate rather than trying to enter our positions early. Early entry often leads to losses more so than profits. So try not to predict what the market's going to do. Try to react to what has already occurred. Do your analysis, know your levels, and move through. Okay? All right. Now, let's take a look at our NASDAQ 100. Holding a little flat. Now, these lines I drew in yesterday when I had Brent on, we're talking about yesterday acknowledging the levels of support that are right beneath us in the NASDAQ 100, but also levels of support that could be violated if we were to see a deeper pullback. And I made note yesterday of the importance for us as traders to make sure that we are considering the potential that the levels we set for ourselves are not going to hold. I know it's difficult to say that and difficult to think of it like that, but the truth is, if we believe that the levels of support we've set are going to maintain and are going to hold, we put ourselves at greater risk for being surprised. So always set your first level, call it just that. That's my first level. I believe that'll hold. But what if it doesn't? Make some plan as to how you will act if things don't maintain. Because the biggest issue here is, as you can see from my white line, that's about an 8.25% move under the 200-day to what could be considered the next level of horizontal support on the NDX. So with that in mind, if you're a trader who says, I can give up 8% on a break of the 200-day. My positions are comfortable, or I'm in enough profit, or I have enough faith in and trust in the market. Whatever your reasoning is, if you can sustain an 8+% move, then you probably look at that potential below the 200-day and you'd have fewer concerns. But if you, on the other hand, said, yeah, that's not going to work for me. If the risk is greater that I visit 22,000 down here and sell down 2,000 plus points, many traders are not going to be comfortable with that. They want to make an adjustment if they get below it. So as you who are frequent attendees know, I'm a big proponent of planning our trades and then trading the plan we set for ourselves. And so I am simply encouraging us to know those levels. Where will you take your action? So the NASDAQ below the 50-day is our key component on it. If I apply just the 50-day, it's a little more obvious, isn't it, everyone? Look at this. We have basically been below it for the entire month of February. Now that we are in March, we maintain below the 50-day. Now, if we can get ourselves back above the 50-day, we could start perhaps trending back to the upside. But for the meantime, we've got some pretty well set levels above us and below us where traders can choose to apply risk. For example, on a close through the 50-day to the upside, they may add risk. On a close under the white line of horizontal support here, just around 24,000 on the NDX, becomes an area where traders might lighten up, reducing risk based on the potential for a deeper pullback. Okay, let's see how we're doing with the Russell. So the Russell's holding on, everybody. We are still at support. We've had a bit of a bounce in yields again today, and that might be leading a little bit of the initial weakness in the Russell. If you're a bull if you're a Russell bull, that is, then what you want to see is this pop through resistance this morning get pushed back, which would of course be due to buyers of treasuries pushing yields down. Initially this morning, selling of U.S. treasuries, it would seem, is what's leading us on this initial pop and probably keeping us a little weighted down, if you will, relative to the Russell. Let's look at that green line, though. Again, that's the 2,600 level on the small caps. A couple of key things here that I'm noting. Number one is that the RSI has maintained about the 45 level or so. This is an area you could consider to be supportive in the relative strength index here down below. But we know price matters more. We're going to zoom in a little bit to our hour long again, and I'm going to back that off. And let's just see here, excuse me, the lower low we made got bought up, but again, we are holding an important level at that round figure, that 2,600. So did we trade intra-period below the ledge? We sure did, by about 50 points, as it turns out, and we bought that pretty well. So that was a healthy sell-off, but it probably was one of those, I say probably, it could be considered to be one of those flush-out moves, because it was a pretty good move, giving up 50 points from the level, about 2%. So, we basically had a significant move lower, and now the question is whether any of those recent lows can be considered a broken trend. And what I mean is, if I wanted to draw a manual trend line here, something like this, we would see that we're below the recent uptrend. So there's some work for the Russell to do. This by itself on the hourly and below these three simple moving averages that I'm using, these are just variations of daily windows of time. So on an hour-long bar like this, a 325-hour moving average, as it were, is the same as 10 trading days. So essentially a 10-day moving average, trying to look at it over an intra-period chart here. So, this is not a positive at the moment, but we are holding horizontal support in the small caps. We'll see if that maintains as we move a little bit forward. Okay, so next up, we've had some big moves in semis. interesting level to be kind of validating right here. One of the concerning, I say concerning, it's concerning in the sense that the RSI did make a lower low in price here. This is interesting because notice the difference in price when we bounced last off the 50-day back in February, and then where we reside right now. This is what I'm talking about in terms of lower or bearish divergence, unfortunately. So the RSI makes a lower low while price makes a higher low. This is less than ideal, but could be working off as we speak. We had this also a lower high in the RSI when we made the last peak up here. That also stands out. So once more, maybe a little of a pause, maybe a little loss of momentum as it relates to semiconductors here, but we are battling it out at the 50-day, as you can see. Now, yesterday's candle was a hold move. It did close above the high trade from our low day in the pullback. The important aspect of that now is that if that is going to hold, what do we want to see? We have to basically maintain the low we created yesterday. If we trade through the low we created yesterday, which comes in just around 7,800 on this index here, the SOX, then that would be problematic. It would be a greater likelihood that we pick up steam in the selling here in this important industry group. So maybe keeping an eye on that is important. But I think what we're witnessing right here is a very tight candle completely engulfed within yesterday's price action, the high to the low. We have every chance to maintain the 50-day, but the areas of note, most notable, of course, become the high we created yesterday and the low we created yesterday, and that's where we can start to see momentum. You get through the high, we may have momentum and an odds increase for continuation of trend, and if we trade through the low of yesterday, now our odds increase for a continued breakdown of the recent trend. It can honestly be that simple, everybody. So keep it in mind. All right. Okay, so there's our semis. Let's peek in on our transports. Have been doing pretty well. They're off 1% here today. This seems to be a bit more of consolidation, though, doesn't it, everyone? We've got a a gentle downslope to our most recent peaks and gentle upslope to our most recent bottoms, depending how you draw it. And if I leave just the 50-day moving average, well, the 50-day window traders look at that 50-day and suggest it's been supportive for a while, at least back to November. But when we broke out in November, we haven't yet tested the 50-day. Wouldn't it all be a surprise to see the transports test the 50-day in here? Notice as the RSI is getting a little bit lower, this is an area where we would start to expect a bounce in the RSI. Remember that if we are talking about the RSI as a kind of a trend validating signal, one of the key components is that we normally relying on the 70 and 30 lines as being overbought conditions over 70, oversold conditions under 30. In the instance that you're looking at a strong trend one way or the other, in this case, we're looking at a strong bullish trend, right? So with a bullish trend moving strongly to the upside, the thought as it relates to the RSI is that oversold conditions come into play around the 50 line. Some traders would suggest the 45 to 55 level, kind of a zone of support, if you will. And the thought is that oversold conditions in a strong uptrend won't get you to the 30 line, only get you to about the 45 to 50 level. And that can be considered to be oversold. And if that's the level of oversold conditions in the midst of a strong uptrend, everyone, well, then we might be at an area of short-term support. What do we want to see from here? We want to see that obviously price maintains, but we need to see that fish hook to the upside from this level. So let's see if the transports maintain that ledge in the RSI here moving forward. All right, now let's take a look at our components within the transports. What are leading the transports higher? Let's start with our plane. So we'll do air, $ DWCAIR. I'll apply all my moving averages once more. There we go. We've been thrown back to the 200-day approximately. So the trend here is just a little bit weak as we've sold down a pretty good percentage here, about almost 19% from the peak to find this 200-day moving average potentially as support. It does appear that it could act that way, doesn't it? I mean, there's been some price action here previously. And we'll see if the 200-day maintains. It has been supportive. Since we've gotten above it, we were below it for a very quick window right here. We tested 1 day there, and then we tested a few days here. So we could say it's been validated as a longer range of support on the planes here, but obviously under the 200 things change, and that could be a driving a pullback in the broader transports. So keep that in mind as we watch planes here. What about the other aspects? How about our rails? I hope you all are noticing here, everyone, those of you who might not be familiar with Thinkorswim necessarily, the symbols I'm putting in here, $DWC. As I do that, you see that I get a ton of available options to me. And if I wanted to use that lookup tool, when you start typing, I'm going to make this 20, and just start typing in $DWC, you get to see all of the available industry, sub-industry groups that are on Thinkorswim, everyone. This is a really good way if you're just looking to understand where money is moving around. You can actually access these exact same symbols anywhere you're looking within the platform. So if you wanted to go to the Market Watch and Quotes page, you can access them there as well. But these are really helpful to me for those groups where I don't have opportunities to highlight a collective, and this is really the best way to do it. Look at the movement we've seen in the rail stocks here, everyone. Big move, took us out of what had been a pretty good range. I mean, I can see a bit of a line through recent highs. So let's just take this line up like so, and you'd be forgiven for thinking, well, we got to the resistance line here. There's no reason it should go higher, and yet it did. Pop to the upside, running now against that 20-day moving average in orange. We've recently had an RSI sell signal for some traders, right? Simply put, that's taking your RSI from overbought conditions into below the 70 line again. So this has just been a pause, at least a validation of the trend. Now that the 20-day is caught up in here, some traders would say under the 20-day is when things change. But these are your standard railroads, you know, your UNP, for example. That looks awfully similar, doesn't it? Or your CSX, same thing. So just to give you some ideas there. And then, of course, the last one are truckers. DWC, $DWCTRK. Look at the truckers. Goodness, they've been cruising along here. Even in the face of higher oil prices this week, we made just a new short-term high just yesterday. So the 20-day moving average here has been, this is another one of those great reminders of how technical analysis can help us. When we move through an area of resistance, what do we expect to occur after that? We expect trending after that. And we got it here in the truckers. So we broke through this band. In fact, let me make that a little longer, make it a 2-year so we can see what happened. Oh, goodness. So we had this double bottom essentially, right? So bottom 1, bottom 2, and then much higher RSI versus the first time we touched it. So we could say we move through this zone and we would expect to see trending thereafter. Well, that's exactly what's gone on. And it's happened fast because we've been using the 20-day. So pullbacks to the 20-day have been opportunities to join the trucker trend. These are the companies you may not be as familiar with, but you probably see them on the road and maybe just don't recognize it. So here's your JB Hunt, which has been running against that 20-day as well. Maybe a SEA, also an opportunity. And then what's a nuts? Boy, that looks like same thing, 20-day or 50-day there. Similar trend as we saw in the whole space, right? Another one in that space, Old Dominion, ODFL. So a few of these, just to give you guys some ideas. See, again, this is why I think a lot of traders follow a method similar to the one we incorporate for you all here, this top-down review. When looking within the market, we want to talk about the index that might be leading us, and then the leading spaces within that index, right? And then the stocks that are leading those spaces that are leading the index. So that's the top-down viewpoint. So as we often discuss it here in this class, we use that Market Watch page, and we take a look at what's been leading year to date. So traders might be looking at the S&P 500, for example, because while it's shown a sideways or consolidation window here, this is an area where leadership is still present in the S&P, because the S&P has chunks of energy and materials, industrials and staples that the NDX doesn't. The NASDAQ 100 has them, but a much smaller clip. And of course, for those of you who are new, we try to highlight this just with the visual heat map. All of our leadership has been down here in the lower right. And just look at this, the size of these companies relative to the size of our traditional technology, communications, discretionary, financials. Those companies are our largest and therefore would have to be participating if we are going to get the market moving higher. Now, if you look at that in the NASDAQ 100, those same spaces are just small as well. So you just have a much lesser component tied to those groups. So that's kind of why the market has been still performing, broadly speaking, with the S&P maintaining levels and still, instead of completely, pulling back aggressively. It's because we've continued to see leadership from our defensive spaces. So let's talk a little bit about those defensive spaces here. Energy pushing to the upside. I just got done with that discussion about breaking out, looking to trend thereafter. We did exactly that with energy. Notice the strength of the 20-day since we traded above my red line. The 20-day has actually been untested in reality. Yesterday's low, kind of the closest we got, right? Now, you could, of course, incorporate a 10-day, and for a lot of it, you'd still be in it. As a matter of fact, boy, it looks like we've been above the 10-day legitimately all the way back to late December here. We had a close that was probably really close, right on it. An intraday move below it, closed above it. Intraday move below it, closed above it. Same thing. So 3 days in a row. So if you're a real disciplined trader, I can see there being traders staying with the 10-day and waiting on a close below the 10-day here in energy. Haven't gotten it yet. Since we're looking energy, let's go ahead and apply the oil chart. Pull that up for you here. And as I do, I just want to remind you that it's a futures symbol, everyone. And so make sure you're familiar with the futures risk disclosure statements. Of course, these are higher level of risk. These are futures trading is not appropriate for all investors. But look at the move we are seeing here in oil. The level we gapped on Monday morning and has maintained, and we have pushed higher yet again today. So we're into that, whoops, sorry about that. We're into that $78 ledge, and that is coincident with the highest we have seen since the summer of last year. So, again, this is a headline-driven market right here. Try not to apply too much in the way of technicals, but know the levels where things change. I think it's fairly clear to suggest that a move back under the gap level here around 70 a barrel would be a significant development. And that, of course, would be an $8 move to the downside, better than a 10% pullback in oil if it were to occur. But trying to assign and apply technicals to such a headline moving market is difficult. So caution probably in the offing. Maybe utilize rather than technicals here. Maybe start incorporating your trade process a little more in terms a little more aggressively. And what I mean is evaluate your profit, evaluate your risk on the table, and start setting exit strategies tied more to your risk tolerance and your comfort rather than the technicals on something like this, because unfortunately there's just too much risk of a headline, of a tweet, of anything that could move oil against you. So just be aware. All right. So that's the energy discussion. Let's keep it moving here. We'll go ahead, look at materials. Materials is broken down from the 20-day moving average. And again, getting into the concept of how do we manage our positions. A couple of days below the 20-day, if you've been trading this space, this is a notable development. It doesn't mean it has to take action, right? But some traders would, especially the trader who bought when we moved through the prior highs and you had an awesome pop. So the trader who bought on a breakout and got all the way up there, made 15% to the peaks, and is now hanging out and might only be up 11% or so, they might be saying, you know what, it's unclear what's going to happen, or I want to take some profits, build some cash, force the space to reestablish its foothold, which could come in somewhere in the vicinity of the 50-day moving average over the near term. And maybe the trader wants to deploy once we've had redeploy money once we've had a test of support. That's one way to manage it as well. Okay, there's always a way to put yourself in a better comfortable position. I encourage you to always be in the comfortable position. The ability to manage downside that you don't expect is really key to trading and to being in the game, staying in the game of trading as long as we possibly can. That's really the goal, right? All right, keep it moving here. Let's move on into industrials. Okay, holding that 20-day. Again, we're seeing consolidation. We noticed the RSI moving lower, the RSI into the 54 ledge, not yet quite to oversold conditions from that strong uptrend view of RSI, but it's still working pretty well. We are intraday below the 20-day, but we were also intraday below the 20-day 2 days ago. Let's see if industrials get a little bit of a pop there. We've got a little bit of leadership here from discretionary today, up 0.5%, trying to move through the confluence of the 20 and the 200-day moving average. We would love to see that development because we've had a good pop here. So the fact that we've pushed ourselves right back to basically the highest we've seen in the last 2 weeks tells us that could be resistance, or this could be the decision point for a continuation move, everybody, right? So what do we need to see? More highs short term from discretionary today. That would be a nice development in this instance. One other note, in discretionary, we have a bullish divergence once more. Okay, so low in the RSI, higher low in the RSI with the new low in price. Bullish divergences don't always play out bullishly. Remember, these are just leans. Everything in technical analysis is an odds-based approach. Probabilities, not certainties. So the odds favor the low we made 3 days ago being the short-term low. But by no means does that mean it has to maintain that low, right? We could easily get rejected, make a lower low, and everything that we view from a bullish divergence in the RSI gets thrown out the window, okay? Okay, keep it moving here. Staples off a little bit. Not a terrible development if we want to see a risk-on trade. Same thing. Let's see what's going on with our utilities, pulling back a little bit. Utilities and real estate pulling back as yields climb a little. That inverse relationship we should know about. Same thing. That's an interesting level to be getting a tail. Now that we have intraday traded under the 20-day here. Could be a significant development for the REIT space there. So keep that in mind. And remember just the importance of real estate investment trust and having, and I say importance, what I mean to say is the factors that impact REITs. Yes, interest rates are a key component there, but commercial real estate is a big chunk of this space as well. So keeping your ear to the rail on a lot of that stuff is very important as it relates to the real estate space. Now, let's hit up a couple more of those. Why not? Let's look at tech. So tech at least held the short run support, another bullish divergence. So, hey, these are not terrible developments that we've maintained horizontal support. Again, if nothing else, we don't know what it tells us is going to happen, but we do know that our odds change dramatically under and above certain levels. First one I'm going to suggest based on the short run here is going to be to watch something like this. Can we get back above the downtrend line? probably most important to get back above the 50-day because we've really been struggling at the 50-day. But we do know that our odds for weakness increased dramatically under this 52-75 zone in this space, in the IT, this sector, okay? And then the last two, quick look at financials, bouncing off support here. That's a clear horizontal level of support. Yeah, we've broken the trend, but note the 20-day above us. If we can catch the 20-day to the upside again, we could really get those get working once more in financials. And then healthcare had a fake out breakout trade on Friday, and we've been thrown back to the support zone. Hopefully this is one that's going to hold up. This is getting a little bit weaker than some would like to see. Notice we've made at least a matching low, maybe as the lowest low we've seen the RSI in the healthcare space in a while. So getting a little precarious as it relates to healthcare right here. Now, let us take, I've got a couple of things I wanted to highlight here on my other chart. So first of all, leadership visually, where's our relative strength coming from? Remember what this chart is, everybody? This is a visual group of all those 11 sectors versus the S&P 500 on a relative strength basis. So we can see downtrend in the relative strength relative to technology, but potential for a breakout here. As you can see, downtrend line is pretty obvious. Let's see if we can break that downtrend. Notice the outperformance in real estate, outperformance in utilities, outperformance in staples and in energy and materials and industrials. So this is another good way to visually see this relative strength that I was highlighting in the way of the charts. And because I often hear about it, I'll go ahead and share this. This is going to be in the show notes if you're catching this in the archive. So just look down below, but I'll share that grid with you all. We're going to call that the relative strength grid. And just remember that scripts that we share like this, these are not guaranteed for timing nor accuracy. All right, next up, quick peek at Rachel Deschelle's breakdown of the S&P and the NYSE. Our stocks over the 50-day moving average were just shy of 60%, but our 200-day moving average stocks were under 54 or at 54%. Notice the NYSE making new highs. We are at a pretty good low, so we are not making as many near new highs here. That's probably not a surprise given the amount of consolidation we've undergone, but it's also notable that stocks aren't making new lows per se. So not a big spike. I mean, go back to to Liberation Day back in April of last year, you can see when things got real squirrely, but something to bear in mind there. All right. Yeah, that should do for now. What do you say we get to some of those stocks in the news that everybody is always excited to see? I think that the one that really caught my eye this morning was Meta, because we had two analysts come out. In fact, they went both directions. One analyst upgrading Meta today. That was Erste Group upgrading Meta to buy from hold, citing historically low valuation and Meta's continued solid user and profit growth for this upgrade. And then on the opposite end, we had a downgrade of Meta from a REIT to neutral from buy. So from neutral to buy, from hold to buy, and then from buy to neutral. So we went both directions on Meta. Now, the first group said it was valuation sided. The downgrade call comes as it says that the company is lagging on their AI monetization and their surging investment. So they're spending more, of course, that it's going to lead to margin declines. So depending on which side of the coin you take, these analysts are clearly diametrically opposed. One says you have a value proposition with Meta, and the other says margin compression. So difficult to take your analysts at their word when you've got two different ones telling you two different things. So the pattern on Meta might not be best visible here on a daily, but maybe on a weekly. That is the 100-week moving average there, everyone. Notice that it has been supportive for us dating back to April of 2023, as it turns out. So we've previously tested it once, approximately, and then we tested it here and held, tested it there and held, and it's right beneath us at 613. Still about 50 points off, but we should make note of that. All right, beyond Meta, we had some, there was a big one that got beaten up this week was Mondo. MDB got, hammered on earnings, and Scotiabank analysts upgraded MongoDB to outperform from sector perform. They elevated the price target on this one, everybody. 275 got pushed up to 310. Says that the shares at the current reset level create an attractive buying opportunity. And then I want to hit two that are in that material space. Dow was upgraded. So this one's notable for a couple of reasons. Here is your longer range 2-year chart, everyone. And notice recently we had the golden cross, so to speak, that 50 crossing the 200 to the upside. We had a support test at a former resistance, now support, coincident with the 50-day moving average. So it's an interesting developing chart because we're taking what was a clear downtrend and building out what could now be a new uptrend. Now, depending on how you choose to draw that line, some traders would start something like that based on that peak up there. Other traders might say, you know what, I'm going to draw it from just the last substantial peak, and I'm going to capture as much of what's going on as I can. And I think it's kind of like this, actually, because when we got back above this line, things started to improve all through in here. So this is an improving chart. And they were upgraded at BMO Capital to market perform from underperform. Target here up from 22 to 35, and we're almost to that 35. The reminder I want to offer you is that even the analyst price targets are no guarantees to be achieved. The last one is in the same space, materials here, LYB. And I've been watching this one for potential example trades in my classes, and you can see why, everybody. Wow, same thing that we just saw in Dow, right? Broken downtrend, 50 crossing the 200 in imminent future, 20-day providing support, recently just yesterday broke out. Interesting looking development there. They were also upgraded at BMO Capital, this one to market perform from underperform. Price target here, substantial boost, everybody, from 38 to 68. So they're changing their tune entirely. It is a difficult spot. All of a sudden, we have pushed ourselves maybe to a gap zone. This may very well be a spot for a potential pause or a breather before any continuation of the existing trend. So keep that in mind if you were looking at LYB here. Okay. Let's do one more for you. We had a couple of downgrades that I wanted to highlight. One of them is Walmart. And Walmart's downgrade, there you go. And so you can see Walmart off 3.5% here, had been surging for much of this year, pulling back potentially to the 50-day moving average. Walmart was downgraded at Erst Group to hold from buy. And that makes some sense to an extent. I mean, here's a stock that's added a tremendous pop here, 35% over about 60 bars. So that's just, right around 3 months. So a pullback like you're witnessing now to a possible support range at the 50-day moving average makes a little bit of sense for it, but that downgrade was notable as well. Okay, we're going to wrap it there, everyone. Busy day, though, of course. Remember, much more for you here on the Schwab channel. Remember to not just have access to the calendar, but go ahead and save the calendar, everybody. Make this a bookmarked page so you can see what we've got. We've got coming up at 11 a.m. Eastern, long verticals and diagonals. Connie will be on for that. We are investing in dividend stocks and looking in the market for these, how to go about that process with Cameron today. We're going to be trading the trend. That one with our man, James Boyd. If you've not attended a JB class, you're missing out, everybody. Strong encouragement for you, not just to check out all of us coaches, but to come and spend your time here, educating, learning. Find the coach with whom you connect, the one that makes sense and that you enjoy watching. We recognize that we are all individual, We are all going to have a different connection. If you want to learn a little bit more about us, use the Meet the Coaches link, everybody. We've got our own pages. You can go in and watch our video, get to know a little bit about what we do when we are not here hosting for all of you. So with that, I want to thank my friend Barb in the chat for managing things today. Make sure you're following us on X, Kevin Horner CS, Barb Armstrong CS, and absolutely be sure you're subscribed to the channel, everybody. Remember, Trader Talks. And if you like this discussion, hit that thumbs up for me. Get this one reviewed by compliance. We'll get this right back into our archive for you all, and it'll be available for review very shortly. So with that, hope you all have a fantastic rest of your Thursday. I look forward to catching up with you again real soon.